Hello and welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Reema Tendulkar and Hormuz Patagia. And guys, it's the monthly expiry. We were just discussing
it's your
birthday.
More important.
Thank you so much. But I was just thinking August is just, it's over. It just started and it's almost ending and we have the monthly expiry today. And as we were discussing, the expiry move is just what we saw right now. So it's a 140-point recovery from the lows as well. Still, it's a major cut that we are seeing on the indices. 316 points gone. But again, the bulls would like the recovery that we are seeing right now. Most importantly, what happens in the last 1 hour of trade remains to be seen because that's where we could see some major moves across the board or sectoral indices in the red right now. But yes, there are pockets which are doing well, and we'll discuss that in greater detail through the course of the show as well.
So, now we're at 24,650. The intraday low was 24,500. So, as you said, it's about a 150-point recovery from the day's low. Some levels to watch. We're very close to our 100-day moving average, which is 24,663. So, just about 10-15 points away from that level. Once you conquer that, you've got the 20-day moving average at 24,739. So it's good to see at least the markets defending that support level of 24,500. But can we build on that and conquer some of the resistance levels remains to be seen. Well, broadly, IT is weak in trade, pharma is weak. FMCG, which did very well at the beginning of the week, is seeing some amount of profit booking. Bank Nifty is falling in step with the frontliners. So what's holding up? Well, it's a motley mix of stocks. So let me run you through some of the large cap gainers. Adani Enterprises is your top gainer. Hero MotoCorp, Asian Paints are up between 1 to 2%. Eternal has some green going for itself. L&T, Titan, Bajaj Auto. So still, while the FMCG index is down close to about 0.5%, many of these other allied consumer, they would call them discretionary spending. These are the stocks which are still in the green. But now Hormuz is at the big wall. He's going to put the spotlight on the top movers in the market.
A very interesting recovery from the lows of the day, and it shows on a lot of the broader market names as well. You start off with one name that has been bucking the trend all through the morning session, and that is JTEKT India, and that is the biggest single day gain that the stock has seen since May of 2023. And take a look at the volumes here. Almost 83 lakh shares have already changed hands compared to a 20-day average of just 33,000 shares. And on these volumes, the stock is up 9% in today's session, was up in double digits a few minutes ago. And with this move, the stock has also broken above its 100 and 200-day moving average. But despite this, been an underperformer this year, down 10%, and has single-digit returns in 3 out of the last 4 calendar years as JTEKT India. So has done precious little over the last few years. The other one that's doing well today is Advanced Enzymes, and this too has seen the biggest single-day gain since September of 24. This too is slightly off the highs of the day, and the last instance of the stock having more than 20 lakh shares traded in a single day was also back in September of 24. Today we have had 22 lakh shares change hands compared to 20-day average so far of 2 lakh shares. And at this rate, it has to cross above 323, which is its 200-day moving average, which is another key level. The stock is down 7% so far this year, was down a similar quantum in 2024 as well. A stock that has picked up, though, in the last few minutes is Ola Electric and has continued to do so, now 10% higher on that stock. Third straight day of gains, now up almost 15% in the last 3 trading sessions. You've had more than 15 to 20 crore shares already change hands in today's trade compared to a 20-day average of 8.1 crore shares, and it is sustaining above its 100 DMA of 46, and the next level that comes into play is the 200 DMA, which is at 59. And last one is not a stock that we talk about frequently on the volume side, but look at the recovery that has seen in HDFC Bank, and that stock is also contributing significantly to the recovery of the Nifty, but it's been under pressure ever since it has traded ex-bonus, declined in 6 out of the last 7 trading sessions. And the next level is the 100-day moving average for HDFC Bank, which is at 975. That needs to be taken into consideration. But of course, the stock has not delivered negative returns over the last decade or so, but the returns in the last 4 out of the last 5 years has been in single digits.
Okay, interesting data there. Thank you so much for joining us with those stocks, Hormuz. Those are some buzzing names that we've been tracking. But the other space that has been in focus is the auto space. Sudarshan is joining us now. There's a Jefferies note on the auto sector. Overall, what the GST cut means as well. Sudarshan, over to you.
So one sector that is holding on to gains in this today's week session, at least in the first hour of trade, is the auto sector. And it's on the back of, because there is an expectation that GST will be cut and most of the auto companies are expected to benefit from that. So Jefferies has come out with a note today. It believes that potential GST cut should provide a boost to auto demand, especially two-wheelers and small passenger vehicles. And it has raised FY26-28 two-wheeler and PV industry volume estimates by 2 to 6%. And in resultant, EPS has increased for TVS, Hero Moto, Maruti and Hyundai, and that increase has been in the range of 2 to 8%. It expects TVS and M&M to deliver highest 27%, 19% FY25-28 EPS CAGR respectively, and preferred buys for Jefferies are TVS, M&M and Maruti. But one stock that it has upgraded is Hero MotoCorp. Earlier target price was around 3,800 and target price has been increased to more than 5,100. It has upgraded to hold from underperform, but it maintains underperform call on two stocks, and those are Tata Motors and Hyundai.
Thank you. For that, we will slip into a break on that note. On the other side, we'll put the spotlight on crypto market. Manisha will join in on the other side.
Welcome back. 24,650 is where the index currently stands. So that is a 150-point recovery from the lows of the day at 24,507. So an impressive recovery from the lows of the day, at least for the benchmark indices. HDFC Bank has been a primary contributor to that recovery in today's session, as we can see from the recovery in the Nifty Bank as well. And Nifty Bank was the one that was the pain point for the index for the last few sessions, was down almost 1,300 points. Heading into today's session, it made an intraday low below the 54,000 mark and has since recovered from those levels of around 53,900 odd, still down around 200 points, but an almost 300-point recovery from the lows of the day. Just pull up a couple of stocks. Dr. Agarwal Eye Hospitals is the one, is down almost 13% currently. Dr. Agarwal's Healthcare is the other one, that this is at the lows of the day, and Dr. Agarwal's Eye Hospital is the other one. So both companies have announced a merger with each other, following which the stock has taken a bit of a knock. At one point, the stock was down almost 18%. Has recovered slightly from the lows of the day, still down around 12.5 is Dr. Agarwal's Eye Hospital. So that is one name. The other one, of course, is Ola Electric. We just spoke about it a few minutes ago in our buzzing segment. That continues to move higher, 8% higher on that stock as well. On the downside, though, a couple of names. IRB Infra is one of them, 2.5% lower on that stock. Remember, today is the last day for the stock in the futures and options segment. It will move out of the FNO segment today and will start trading only in the cash market from tomorrow. That's one stock. The other one is Poonawalla FinCorp and the other one is CESC. Along with these three names, another 5 stocks too are moving out of the FNO segment in today's trading session. So CESC almost down 1% and Poonawalla FinCorp down 0.5% in today's trading session. So for now, it's a broad-based recovery that the market has seen from the lows of the day, holding on to key support levels. We'll take a short break and back with more on the other side. Stay tuned.
On Crypto Corner today, we will be talking to Sanjay Katuria. But before that, let me tell you that the Bitcoin has continued to see some pullback into the Asian markets today. $111,000 is where we seem to be trading. Remember, an all-time high has been at 124,000. So it has been a choppy market there, but then there are just so many fundamentals and global cues to watch out here. Interestingly, when you look at the Bitcoin open interest, that is at around $30 billion, not too far away from its all-time highs of around $32 to $34 billion there. It has been a very good the month of August, and If you remember, this has been a saying, by the way, that the month of August usually is not so great for Bitcoin. But this month is the smallest August decline that you have seen coming in for Bitcoin since the year 2021 there. If you also look at the markets, well, it is about stable coins clearly, because after US, now Japan is looking to launch a yen-backed stable coin. There are similar conversations also here being heard from China, which seems to be focusing on stable coins, highlighting offshore opportunities and domestic limits that could be seen via this stable coin there. If you look at the prices, then we have seen very strong gains in last 1 year when it comes to any of these currencies. So whether it is about Bitcoin or Ethereum, Solana, as you can see in the last 1 year, we've seen many of these prices almost double. Binance from $20 to almost $120 right now. And we've seen Cardano double up as well in the last 1 year. Cryptocurrencies have seen very strong gains in the last couple of years, with volatility declining, institutional buying gaining. Even the home companies, or rather the family businesses, have seen some investment coming in there. And we are looking at markets focusing on further acts being cleared in US. We already have seen the Genius Act go through. It is going to be about clarity and CBDC surveillance that the markets are now looking at. Sanjay Kathuria now joins us. Mr. Kathuria, thank you for joining in. What is your sense really with the kind of buzz that crypto seems to be generating yet again, not just for the US, but for the rest of the world? Would you say this perhaps is the right time to start investing here?
Thank you so much, Manisha and CNBC, for calling me. And I think any time is a great time to start investing in an asset class if you are looking at a long-term horizon. I don't think so that people should dabble in crypto if they're looking for quick gains, get rich quick, and because they've heard stories that this instrument was some $10 or $5 in 2008, and suddenly, it is now around about $110K. I think we should focus on long-term investing, and in long-term, this asset class, because it is limited in supply, and the global adoption of this asset class has happened very quickly now, and of late it has taken off. I think over a long term, yes, there could be good promising returns in this asset class.
Mr. Kathuria, people didn't buy it at 20,000 or 60,000. At 120,000, they find it very, very expensive. What would you tell to them?
See, any asset class looks expensive at all price points on that particular day. When gold was 25,000, it used to be very expensive. Then it turned 60,000, it used to be again very expensive. Today it's at 100K, again very expensive. We have to realize that things which are going to be limited in supply, they will keep on increasing in value. Those are the real currencies. And gold, everybody knows, is not unlimited in supply. So obviously the prices of gold has risen up. And you have to understand now, recently we saw Fed rates getting cut, and we saw an immediate spike in Bitcoin. We have to realize when the safe asset classes, the returns there decline, money will start moving to assets which can create more wealth. We are seeing BlackRock accumulating a lot of Bitcoin. We are seeing UAE has recently accumulated a lot of Bitcoins. So if countries and major fund houses are accumulating a lot of Bitcoins, that means there is some interest and they see merit in this asset class.
Sanjay, I think a very easy and a given comparison would be from cryptos to equities, even safe havens like gold. Where do you see crypto making its space within the traditional asset classes?
I think if you look at crypto as an asset class, it should not compose more than, let's say, 10 to 15% of your portfolio. But I think that bit of portfolio, if you can maintain on crypto, it will add some incremental returns to your total portfolio. So, for example, if your total portfolio is a mix of equity and debt, and you're somehow looking at generating 12 to 14% returns per annum, if you add like 10% odd crypto, then that 14% can go to, like, let's say 15 to 16%. And this 2% alpha can create a very good wealth for you over, let's say, 10 to 15 years. So I always say that, this crypto asset class is like gulab jamun on your thali. It's a sweet. You can't have it. You can't have the complete thali of gulab jamun, but you can have like 1 or 2 gulab jamuns just to savor your taste. So to savor the taste of your portfolio, I think it is important that you do invest in crypto, but don't invest everything there. You can invest up to 5 to 10% of your total investment corpus in crypto.
And Sanjay, would you say that it only has to be blue chip cryptos that one should invest in, or do you think some risk can be taken with altcoins, even meme coins for that matter?
See, again, I would suggest that if you are a passive investor, that means you don't want to dabble into everyday thinking, then please stay to the top 5 coins. Even US has declared some 5 coins on which they will create strategic reserve. So stick to them. And in that also, the top two coins, you can maintain like, let's say 70 to 80% of your portfolio there. But if you are interested in knowing a bit about crypto, a bit about projects, upcoming new projects, you want to study them, like you have decentralized finance projects coming up and they have their own coins which are launched, then definitely you can look at that. But meme coins are a big no-no, because meme coins are nothing but made to do rug pulls. Then for that, you need extreme intelligence. It's like buying a penny stock in equity markets. You have to do deep research. You have to really find out that, that asset class or that particular company has merit or doesn't have merit. And I don't think so that is a capacity of any person, because in equity markets, it's still easier because you have financial reports, you have a management, you can at least go through the numbers. In meme coins, you have nothing but the meme itself.
Well, absolutely. Sanjay, when you look at the Indian market, I mean, of course, we have seen investments here. The participation has been increasing, and the reports do suggest that from lower 20s to mid 20s, it's the mid 30s, even 40s as an age group now coming in for this. With the way institutions are buying, family houses are buying, would you say there's more credibility now coming in for this asset class?
Till a year and a half back, I was also not very gung-ho on this asset class, though I did my learnings on decentralized finance from Duke University. But I was not very gung-ho because I was not able to make out that how would this pan out, in the future. But the adaptation, see, every technology, the value of that technology is only based on adoption. If Amazon doesn't sell anything of its own, but it sells inventory of somebody else, it's a technology. But because it got adopted so well, the value of that company unlocked. Uber doesn't have its own drivers, it doesn't have its own cars, but it's a technology platform. And because it got adapted so well, the value of that asset class or that particular company moved up. Similarly, if crypto as an asset class, the adaptation goes up, then obviously the value of that asset class has to go up. And that's what we are seeing in these days. And I'm also personally getting a lot of calls from people, a lot of messages on my Instagram and my YouTube that, how do we start investing with on this particular asset class? How much money should we put? What is the kind of coins we should buy? Those kind of questions I have also started getting, which means that a lot of people in the age group of 40, 45, 35 are seriously looking at this asset class. But I would suggest to everyone, again, at the cost of being iterative, stick to only 5 to 10% of your portfolio in this asset class. Because it's not yet regulated completely. There is some bit of clarity missing. I'm sure government will come up with that in the next, let's say, 12 to 18 months. But stick with 5 to 10% and stick with major, bigger coins. I think you'll be in a safe situation.
All right. And a right time to have this conversation, as well as the interest really seems to be peaking when it comes to crypto as an asset class. Sanjay, as always, thank you so much for joining in. And with that, that's all that we have on Crypto Corner. We go for a break and come back with more news and updates on the other side.
CNBC-TV18 presents Crypto Corner, powered by...
Welcome back. Still down about 0.25%. The Nifty is lower by 60 odd points, but things could get interesting in the second half. It is the August expiry. Sudarshan is now at the F&O desk. Sudarshan.
So when the session started, we thought that there would be a big fall in the market. But at this point, I can just say market is down, but not out. There's a huge recovery across the board. We are seeing that Nifty is back above 24,600. Similar kind of recovery is being seen in Nifty IT as well as Nifty Bank. Nifty Bank is being led by the recovery we are seeing majorly in HDFC Bank, which is currently flat. Now, on the volatility front, India Volatility Index also at one point in the opening hour of the trade, it was down almost 2 to 3%, and currently this one is also flat. And as far as PCR is concerned, it's currently at 0.94 versus 0.76 that we had seen on Tuesday. Now coming to the levels for Nifty Bank. So support is today's intraday low, that is 53,900. It's very important for Nifty Bank to hold the levels of 54,000. If it fails to hold that, there is going to be a deep downside that we might say Nifty Bank, and for Nifty Bank to hold 54,000, HDFC Bank to play a big role. Resistance 55,000. Now coming to the options data of Nifty, where we are seeing the major actions. On the call side, 24,700. Now the premium stands at 32 versus Tuesday's closing level of 85, and on the put side 24,600 is very active. Premium has slipped to 20 versus Tuesday's close of 25. So it tells you that on the downside for now, Nifty may hold the levels around 24,600, but again on the upside also it's looking very capped at this point. That's the support I have taken. That is the today's intraday low. It's around 24,500. Resistance, first resistance would be 24,740. That is also 20-day moving average. Some of the stocks, Indigo is seeing fresh shorts after today's block days in which we saw change of hands for more than 2% equity, and fresh longs are being seen in the insurance pack, especially names like HDFC Life and SBI Life.
Okay, all right. Thank you so much, Sudarshan, for joining us. We'll discuss Indigo in greater detail on our big story. But before that, let's go across to Mehul Kothari, who's the Deputy Vice President, Technical Research at Anand Rathi Shares and Stock Brokers. Mehul, good morning. Thank you so much for joining in. Well, it's the monthly expiry. What kind of moves would we see? What is the next important level to watch out for on the Nifty?
Morning. First of all, thanks a lot for having me over here. And see, to start with, on Monday during the first half in our halftime report show, we covered that Nifty was hovering somewhere near to 25,000, and we had a view of sell on rise. So, well, we are very much down from there. But as of now, Nifty has found support exactly at 78.6% retracement, which is near 24,500 mark, and that 78.6% retracement is from the rise of 24,350 to the top, which made 25,150, the recent one. So now what is happening is about 24,850 only. That might confirm a bottom from here on, else we would be heading for a one more lower low. We would be more comfortable if we have a lower low somewhere near to 24,400, because that would end the mean reversion which was about to happen towards 200 EMA, because what was happening is 200 EMA was constantly on the lower side and Nifty was quite above, and mean reversion was must for the market, and that would be a very strong buying opportunity. We feel that if at all we go towards 24,400. So to conclude, we feel that we are into a final leg of the fall, and that could be a very strong buying opportunity for the coming months. So coming to today's expiry, we feel that markets will be volatile, but we don't have to jump for a strong buy over here unless and until we are about 24,800 mark, and we feel that as of now one more dip is pending in the market, and that could be a strong buying opportunity.
One more dip pending, that could be a buying opportunity. Mehul, what about specific stocks? Do you see any shorting opportunities here, or would you remain on the long side, at least on the stock specific front?
See, Hormuz, last time when we met on Monday, we covered a couple of stocks, Bsoft and I guess FSN e-commerce was there. Among that, Bsoft didn't do well, but yes, FSN e-commerce is still doing well despite the fall of 500 points. So we feel that one should continue with that, holding that. But for a new opportunity, we feel that markets are quite volatile, and we only have one opportunity today. That is buying HAL, Hindustan Aeronautics. It is somewhere near 4,400. It's better to buy near 4,400. The stop loss for the same would be 4,290, and we feel that it can show a bounce towards 4,600. So why HL? Because there is a double bottom kind of formation around 43 odd mark, and 200-day simple moving average also is placed there. So we feel that that could be a strong support going ahead. Most of the defense stocks are getting ready for a quick bounce or quick reversal from here on. So that is the reason why we are doing it HL. We are recommending HL today.
Okay, all right. Thank you so much for joining us with those technical trades and the levels to watch out for on the Nifty as well. But it's time for our big story now. We spoke about Indigo, and the promoter Gangwal today sold a little above 2% stake via block deal of around 5,030 crore rupees. Sudarshan is back with us, joining us on the big story. Sudarshan, first tell us, how did this share sale start? And if you could also talk about the timeline, it has happened over a period of time.
So before I can talk about the timeline of the stake sale by Rakesh Gangwal and his trust, let's take a look at the return that stock price has given. So in 2025, the stock is up almost 30%. Since the last block days of May of 2025, stock has gone up by 14%. And since the first block deal that had taken place long back in September 2022, stock is up more than 200%. Now let's take a look at the timeline. So the stakes has started out of the dispute between the promoter, that is Bhatia and Rakesh Gangwal. And after that, in 2022, when we were just coming out of COVID-19, Rakesh Gangwal has taken a call to exit the company over next 5 years. And so far, he has sold almost shares worth almost 46,000 crore. Now, as of June 2022, his holding used to be around 37%, exactly 36.6%. In June 2025, after the last block deal, his stake come down to 7.8%, and after today's block deal of around 2.2% equity, his stake has fallen to 5.6%. So in September 2022, when the first block deal took place, he sold nearly 3% stake to raise almost 2,500 crore. Next block deal happened in 2023 of February, raised 2,900 crore. Again, in August 2023, he sold nearly 5% stake to raise 4,200 crore. March 2024, sold nearly 6% stake to raise 7,300 crore. Then August 2024, similar stake was sold to raise 10,700 crore. May 2025, again he sold 5.7% to raise 11,900 crore. And today's block deal of 2.2% to raise more than rupees 5,000 crore. And if you take a look from previous block deal of next block deal, there except one block deal, a stake was sold always at a premium, and that premium was in the range of almost 10 to 47%. So after today's block deal, how will the stake shareholding look? Promoter holding will be 40.4%, of which Bhatia and Interglobe Enterprises will hold around 35.7%, and Gangwal and his trust will hold 5.6%.
Interesting data there, Sudarshan. Every block deal, practically every block deal has happened at a higher price than the previous one. It just goes to show, right? The promoter friction, which was there prior to September 22, has also come down, which the street likes. And look at the way institutions have lapped up. You know, from September 2022, which was, I think, the time of the first block deal, the FI holding was 18%. Now it stands at 27%. DII holding was 8% and now is at 24%. So institutions too. I mean, we've just seen so much by way of increased institutional participation. So we know that this is the dominant player, right? 65% market share.
Correct.
Just run us through the financials, the traffic numbers.
So first, let's take a look at the financials. So I've just taken 3 parameters: revenue, EBITDA, and margin. So revenue in 2022, that is of June quarter, was at 12,855 crore. Currently, it's more than 20,000 crore. That is a growth of almost 60%. EBITDA, it used to be just 720 crore. Currently, it's around 5,700 crore. That is almost 8 times that company has seen a growth in last 3 years. And EBITDA margin, it used to be just 5.6%. Now it's increased to 28%. Now take a look at traffic and company's market share. So total traffic, basically of the entire industry in 2022, that is of August 2022, just a month ahead of the first block deal took place, it used to be 1 crore per month. Now in 2025, that is July 2025, it was 1.26 crore per month. Now in August of 2022, of total 1 crore, Indigo's traffic used to be 58 lakhs, forming market share of around 57.7%. Come to July 2025, it forms 82 lakhs of 1.26 crore, and now market share has only increased from 57.7% that it used to have in August of 2022. Now it has 65.2%. So it's like a dominant player in this field and continues to. It used to be, and it only has increased its presence.
It has increased its presence indeed, but Sudarshan, as you mentioned, right, the stock has gone up almost 200%, almost tripled from the first block. There is significant value creation there, but what our brokerage is saying, majority of them still continue to have a buy recommendation there.
They continue to maintain positive stance on the stock. So as per the Bloomberg data, total 25 brokerages have the coverage on the stock, of which 20 brokerages have a buy call, 3 have a hold call, and 2 have a sell call, and target price is as high as 7,256. And if you talk about the lowest target price, it's 4,050. And some of the brokerages have also mentioned about the few strengths of the company, and some of those are: first, company continues to focus on cost efficient and no frills offering. Second, large aircraft orders will only aid growth going forward. And third, brokerages believe that company will be able to manage spreads that it currently has. Overall, it's looking very positive for Indigo, not only on the financials, traffic data side, but even on the brokerage coverage as well.
Okay, all right, we take that point. But from here on, what next can one expect in terms of Gangwal's remaining stake? Any take on that?
So now he holds 5.6% stake. So if you take a look at the historical data, he tries to, because in last 2 to 3 block deals, he only has increased the block deal size. So last block deal, first he had announced that he would sell 3%. The next morning we get to see that he has increased block deal size to 5.6%. So now with remaining 5.6%, in all probability, he would look to exit the company, and next block deal is likely to take place in Feb or March of 2026. We'll have to see what exactly step he takes. But what he had announced that he would exit the company in next 5 years, it looks like that in less than 4 years, he would be exiting the company. And it has been a huge opportunity for not only Gangwal to raise money, but also for the investors to lap the opportunity in any fall that stock saw.
Indeed, and it shows in the data as well, right, that every time Rakesh Gangwal has sold his stake starting from September of 22, the stock price has only gone higher before the next block takes place. So it's indeed been an opportunity for investors, but currently 4.5% lower on Indigo. They're seeing some bit of profit booking. Of course, the stock has been up almost 25 to 30% so far this year. Parag Thakkar, Senior Fund Manager of Fort Capital, joins in now. Sudarshan, thank you for that big story. Of course, we take that conversation forward first with Parag. Parag, thank you for joining in. You heard Sudarshan on Indigo and the stake sales from Rakesh Gangwal. Now, this dip that has come in on the stock today, do you see this as a long-term buying opportunity in the stock, especially considering the fact that it is the most dominant player in the Indian aviation market?
So my view is that I will not buy at this price very clearly. Up till now, I was very bullish on every blocks which you mentioned earlier, because company has very rightfully balanced the, I would say, growth and balance sheet both. See, in terms of, I always believe that if the business opportunity is large, you have to be financially prudent. And that is what this company has demonstrated, gained market share, in protected margins in bad times also when crude oil was shorter. So full marks to management, but today at this price, I am not a buyer.
Okay, so that is on Interglobe Aviation. At this price, you're not a buyer. Anything else that you would like to discuss, Parag? We are seeing a lot of action specifically happening in the pharmaceutical space. We have the tariffs, but some of that pharma is not under the tariff purview. Anything that looks attractive in the pharma space?
Yeah, so one of our top holdings, of course, with a disclaimer that it is in our PMS clients and not in our personal holdings, and it is one of our top holdings. So I'll put a disclaimer that anybody who wants to buy, just take your advice of financial advisor before buying. But one of the stock which looks very interesting to me is Granules. The stock has corrected from 725 because of the US observation in one particular plant. I think they are almost close to clearing it out. Plus, I would say they were on your channel only, and they said that this year revenue growth will be 13 to 15% and margins will continue to improve. US manufactured products is right now 20% of the revenues, which is close to about 800 crores. And that the promoter has said on your channel only that business is at a much higher margin than their company's overall margin, which is well above 20%. So I think these facts are getting ignored in the stock. Stock is trading at 20 PE only. Net debt to EBITDA is 1x, and cash profit yield, which I focus too much on, is around 8% only. And from here, in my view, from FY27 onwards, 20% growth looks very easy for this company. Stock has corrected a lot from 725 to all the way to 470. So it is my top pharma pick.
Got that. Granules India. And you expect the stock to go back to its previous high levels of above 700?
So it is in my portfolio, so I would hope so.
Okay.
And if in FY27, if they deliver as they said on your channel only, and I think Rima, you were only interviewing him, he said 13 to 15% revenue growth this year with improving margins, and next year growth, he did not give number, but number was far higher as more capacities get released.
Got that. The other one, which I'm sure is also a part of your PMS, is Geofinance.
Yeah,
and
so
there you see value because they hold 6% of Reliance Industries, which in itself is
60% of Geo Finance market cap. So 6% holding in Reliance Industries is equal to 60% of the market cap of Geo Finance. So to that extent, it offers huge value. Plus, when we are talking about Indigo, the promoters, of course, not the very active promoters, but the passive promoters selling stake. Here, one of the smartest promoter of India has increased his stake by 7% through warrants. 15,825 crores at 316.5. And currently, you are getting the stock price below that 316.5. And that too at the day of AGM. I would grab this opportunity because this stake in Reliance offers a margin of safety. Plus, now they have done JVs with BlackRock for AMC, Alliance for insurance, and now they'll grow their NBFC business. Don't forget, they have a huge customer base, clients, data. 49 crore subscribers of Reliance Jio, plus 25 crore loyal customers of Reliance Retail through 19,300 stores. I think this is a time they are ready. They have written in their annual report that they are ready with technology, people, and everything, know-how and data. And now it is time to grow, and that is where promoters have infused money. So I think it is at an inflection point and at a good price.
Pleasure having you as always. Parag, thank you so much for sparing time and joining us today with your views on some of your top holdings and your top picks as well, including Granules India. Take a short break. On the other side, we get you our special offering Under the Lens. So stay tuned. Don't go anywhere.
Welcome back to bring our viewers deep insights. Today we're going to, once again, it's back to our special segment Under the Lens. It's a deep dive into the business model of a company, its financials, the valuations, shareholding, and a lot more. Sonal is now at the big wall. Sonal, what do you have for us?
Thank you so much for that. The stock on my radar today is Cross Limited. The stock has seen quite a swing recently. It's up around 26% in just the last 5 days, but still down 22% over the past 1 year. Remember, it listed in September 2024 at 240 rupees a share, and today it's still down 15% from its IPO price, so not back to those levels. Now, what does the company do? Cross is an auto components maker focused on trailer axles and suspension assemblies. It caters mainly to the agriculture and commercial vehicle segments. Its customer base includes names like Ashok Leyland, there's Liax, Tata International DLT, and overall exports account for around 4% of the total revenues. 40% of total revenues come from trailer axle and suspension, while 60% of it comes in from the components business. The company says the exports should hit double digits by FY27. The agricultural segment, that is expected to contribute 15% of revenues over the next 2 years as well. They are looking at a capacity expansion of around 1.2 lakh tons with around investment of 167 crore rupees, which will be funded through a mix of debt and internal accruals. Let's talk about financials now. Revenues have grown steadily from 184 crore rupees in FY22 to 620 crores in FY25. In the first quarter of FY26, revenues were around 140 crore rupees for the company. EBITDA rose from 19 to 81 crore rupees in FY25, with quarter one at 16 crores, and profit after tax have climbed from just 5 crores in FY22 to 48 crores in FY25, with quarter one at around 11 crore rupees. The company is betting big on the agri segment, as I said earlier, targeting 15% revenue share in 2 years. It has also announced a new tube manufacturing facility, and the capex is something which the company is betting on in terms of big numbers. But there are challenges. Working capital days have shot up to 106 in FY25 versus just 30 in FY24. In fact, cash conversion cycle too has stretched to 139 days versus 100 days earlier. All of this has led to negative operating cash flows of around 32 crore rupees in FY25, which is not a good sign. Promoters, they hold about 68.23% stake as of June, which is slightly higher on a quarter-on-quarter basis from December till now. Among institutions, Edelweiss MF, ICICI Prudential Transportation and Logistics Fund, we have Kodak Manufacturing, LIC Children's Fund, and Tata Young Citizens Fund. They are some of the key investors in the company. Finally, valuations. Cross trades at around 25.5 times in FY25 earnings per share. Also comparing it with some other companies which have similar revenue profile, valuations are largely similar, except for Rico Auto, which is around 36.6 times. But yes, this is what we found out when we saw that surge in the stock price, and this is what the internals look like.
Despite the surge, still below its IPO price. Sonal, thank you for that deep dive on Cross. But of course, a standard disclaimer, this is not a recommendation, and it's just what we are spotting in terms of data, and that on your screens as well. That's Cross Limited for you under the lens in today's session. Take a short break. More on the markets on the other side. Stay tuned. Welcome back. onto the top story that we have been tracking since the morning. India now faces a 50% US tariff that came into effect from yesterday. Exports worth over $60 billion to the US now get impacted. The Trump administration has notified India about the additional 25% tariffs earlier this week. Now, President Trump, while making the announcement earlier in August, had alleged that India was fueling Moscow's war machine by buying Russian oil. Parikshit is now joining in to tell us more on this. Parikshit.
Well, yes, conversations continue. Back-channel talks are on to set aside these 25% additional tariffs. At the same time, key messages coming in from the US Treasury Secretary, the President's Counselor for Trade and Manufacturing, and also the National Economic Council Director in the White House. Peter Navarro going on to say that India can get rid of 25% additional tariffs if it stops buying Russian oil. You've got Kevin Hassett going on to say that India and US are in a complicated relationship. US is seeking India's help to end the Russia-Ukraine war, but India is also showing intransigence by not opening up its economy. And if Indians don't budge on trade, clearly the US president is not going to do so either. Government officials currently tell us that we will be able to overcome this tariff shock. Yes, there will be a hit in the interim, but there is a strong effort underway to diversify exports, strike a deal with the European Union by the end of this year. The UK FTA will be ratified in 6 to 8 months, and the EFTA, the four-nation EFTA agreement, will also come into effect on the 1st of October. So we're being told that these are big economies and they will provide big markets to Indian exporters. At the same time, sector-specific concessions and relief packages are being considered. An export promotion mission worth 25,000 crore of incentives could be rolled out and announced soon by the government as well. On the diplomatic front, while we're talking to the United States and Russia, Prime Minister Modi has also spoken to the Finland president to see if there can be any possible way or breakthrough in the Ukraine war. He will be meeting Xi Jinping and President Putin over the weekend at the SCO summit as well. Now, coming to the immediate crisis, yes, the finance ministry believes that this uncertainty over trade is not good. We must find a diplomatic solution. Otherwise, these tariffs and uncertainty will impact business confidence, investor sentiment in India and in the Indian industry.
That is the big overhang on the Indian markets, which is why we've been struggling now for the last couple of days. IT is on the back foot. The Nifty IT index is down over 1%, and its names like Mastech, Sagility, Zensar Tech, Hexaware Tech. So many of these mid-cap IT companies are seeing a bit of a correction. And in the frontline pack, it's HCL Tech. TCS too, which has reorganized the company and formed a dedicated AI unit, that too is coming under selling pressure along with the rest of the pack. Also, what doesn't help is that while Nvidia's numbers were good, they weren't blowout enough. So the Nvidia share price, I think in after hours, markets are down close to about 3.5%. So that could pressure Nasdaq when it opens up in trade today. And IT is seeing a bit of a sell-off today.
When you tell the market that you have been growing at 100, 200% every quarter, and then you tell them that 50%
it's not good enough, right? It's not good enough.
And that's what has happened with Nvidia, right? The wealth creator that it has been. From 100 and 200% growth trajectory, the next quarter's guidance is even slower than the current quarter. That weighed on the share price in after-hours trading. But with that, we call time on this edition of Trading Art. From Sonal, Reema and me, thank you for watching. Halftime report on the other side.